Welcome to the deep dive. Today, we're plunging into a really rich collection of insights from a source we'll just call Nutstuff.
Hmm.
And this material, it offers a unique blend, global macro trends, some sharp market observations, and also some incredibly thought-provoking perspectives. Everything from digital assets to, well, the nature of creativity itself with AI coming on strong.
Yeah.
Our mission today is basically to unpack all these diverse viewpoints, distill the most critical nuggets of knowledge, and give you, our listener, a shortcut. A shortcut to being incredibly well informed about the currents shaping our world right now. So let's get into it.
What's really compelling here, I think, is the scope, the sheer breadth of it.
Hmm.
It moves pretty seamlessly from, specific marketplace, quite actionable stuff, to these broader, almost philosophical discussions.
Right.
But always grounded in what's happening right now, globally. We'll be looking not just at the what, but really digging into the why and the deeper implications.
Absolutely. Okay, let's start with that big picture then, the economic outlook. Nut stuff notes. A weakening macro environment globally. And they point out that while the U.S. market is still dominant, its valuations are, well, they're quite high,
Yeah, expensive.
expensive. But they offer this crucial reminder,
Right.
we buy stocks, not indexes, which suggests, a selective approach is really key here.
That phrase, we buy stocks, not indexes, it really frames their whole investment thinking, doesn't it? If the broader market is a worry, then the question becomes, okay, where are the specific opportunities?
Mhm.
And their analysis points to a pretty clear strategic shift for the second half of 2025. They're favoring non-U.S. themes, specifically highlighting three stock positions. Stocks chosen for sensible valuations and, importantly, dividends.
And there's one portfolio move that really jumped out at me, swapping out Tesla for Google. What's the thinking there, according to Nutstuff? It feels like more than just changing tech stocks.
Oh, definitely not just a simple swap. Nutstuff sees this as kind of a bellwether,
Mm.
a signal for a broader market re-rating.
Mm.
They suggest we're moving away from that growth at all costs idea, where, frankly, speculative high beta things like Tesla did really well,
Right.
towards a time where more mature cash-generating businesses like Google, with diverse revenues, solid fundamentals, they offer more resilience,
Mm.
more long-term value, perhaps.
So it's a shift in where the real alpha might be found now in this weaker environment,
Mm.
away from pure potential towards maybe proven profitability.
Exactly, moving from innovation hype maybe to robust established business models. That seems to be the core idea.
And speaking of performance, Nutstuff's own portfolio reflects this deliberate, often contrarian style. They're up 3.5% year to date.
Mm.
And their track record since 2020 has been, well, remarkably consistent. They turned an initial $100K into $244K. That's a 16% compound annual growth rate. Pretty solid.
And when you link that performance to the specific trades they mention, it really underscores that contrarian view.
Like what?
Well, for instance, Nutstuff talks about a long European defense short U.S. autos trade.
Yeah.
That one yielded, get this, 117% year to date. Or their long clean energy short fossil fuels position, that's up 60% year to date.
Yeah.
These are bold calls, clearly coming from a unique perspective on the market.
Okay, digging deeper into that global financial picture, Nutstuff mentions a potential return of MMT, modern monetary theory, maybe late 2025.
MMP, yeah.
For anyone not familiar, it's that controversial idea, right? That governments controlling their own currency aren't really limited by tax revenue for spending. They can just print money, basically, as long as inflation is managed.
In theory, yes.
Yes.
Controversial is putting it mildly. But Nutstuff clearly sees it as a possibility down the road. And if that happens, huge implications for markets.
And they paint a picture of a really fragile global system overall. Massive government deficits, growth that maybe looks okay but is propped up by unsustainable wealth effects.
Yeah, an illusion of growth almost.
Right, and the U.S. dollar's strength. It's resting more on everyone else being relatively weak, not necessarily on America's own fundamental health.
Which leads to this critical point they make, something often missed. The U.S. can print dollars, sure, but it absolutely cannot print rare earth magnets.
Ah, the China connection.
Exactly. China dominates the control and supply of these materials. They're vital for EVs, missiles, drones, AI, everything. And that stuff doesn't just call it a supply chain issue. They frame it as supply chain deterrence, a quiet chokehold on U.S. industry. It's a strategic economic weapon, really.
And looking beyond the U.S., their view on Europe is, well, stagnation. Germany, in particular, facing structural decline. Japan, stuck in a bind. You've got inflation, but still super low interest rates, and this unsustainable yield curve policy.
Yeah, that yield curve control in Japan is a big one. Essentially, the central bank is forcing long-term rates down artificially. That can cause all sorts of economic distortions and problems later on.
Okay, so we've got this shifting global macro backdrop, Nutstuff adjusting their investment strategy. But it's not just finance. It ties into resource security, political decisions. Let's pivot now to energy. Because Nutstuff has a really bold, contrarian call here. On the UK's North Sea, they call it a deeply contrarian and stellar call on UK North Sea and UK energy stocks. They even name names. Jersey Oil and Gas, Kistos, Serica, all performing well, apparently.
And this is where it gets really interesting strategically. Nutstuff argues the UK's net zero policy is actually going through a major U-turn, a biggest needle mover U-turn, they call it.
A U-turn, how so?
Well, their reasoning is quite compelling. They suggest this policy shift isn't just, pragmatism kicking in, but it's actually better environmentally in practice, and it boosts Treasury revenue significantly, which in turn lifts UK growth estimates. It's a reevaluation balancing green goals with economic reality.
And we're seeing similar moves elsewhere, right? Germany, after what Nutstuff bluntly calls a failed renewables experiment, has greenlit drilling for a lot of natural gas, billions of cubic meters, in a protected North Sea marine site, no less.
Yeah, 13 billion cubic meters. It's a direct play for energy security.
It really shows the pressure countries are under, doesn't it? Trying to balance these big environmental targets with the immediate need for reliable energy, especially with all the global uncertainty.
It's a huge challenge. How do you walk that tightrope? And Nutstuff also points out that in the UK, Ed Miliband is apparently getting ready to change laws that blocked major North Sea projects like Rosebank and Jackdaw that could open the floodgates for more fossil fuel projects that were stalled.
Okay, shifting gears again, geopolitics. Iran. Still incredibly tense. Nutstuff says the IRGC is fully operational. And critically, those enriched uranium stockpiles, apparently untouched by that recent U.S. attack.
Which means renewed military action seems likely after this brief 10-day ceasefire. It's a very precarious situation over there.
And Ukraine. Nutstuff describes the war as entering a darker and more unpredictable phase.
They mention growing dissent inside Russia, plus more intense Ukrainian operations on Russian soil. But the really big, sobering point comes from Kyiv's intelligence chief, Budanov.
What did he say?
He publicly confirmed, essentially, that territories now under Russian control are beyond Ukraine's reach. He admitted where they stop, that's theirs.
Wow. That's blunt.
It is. Nutstuff says this basically shatters the narrative of imminent Ukrainian victory. It suggests permanent territorial losses, a real stark dose of reality from the ground.
And yet, despite all these tensions, there's this fascinating counterpoint about Saudi Arabia and Iran. That détente, that truce, is actually holding.
Yeah, Nutstuff observes it's holding because both sides are pursuing capital over conflict.
Meaning economics trumps old rivalries.
It seems so. A strategic choice for economic stability over traditional conflict. That's a pretty significant shift in that region.
Okay, let's move to the digital frontier now. Starting with digital assets. Bitcoin ETFs, they now hold 7% of all Bitcoin supply. That's worth about $150 billion. Huge numbers.
Massive. And the expectation, according to Nutstuff, is that money flowing into Ethereum ETFs will accelerate significantly in the second half of 2025. They're talking potentially $10 billion.
But what's really revolutionary here, from Nutstuff's perspective, is how they see Bitcoin itself. It's more than money, they say.
Right. They use phrases like behavior engine, reserve logic, a sovereign system, ultimately pristine collateral.
So not just digital cash, but like a foundational asset, something that builds trust, maybe?
Exactly. They argue it refines character, enables a whole new financial way of doing things, establishes trust where there wasn't any before in a digital system.
And building on that, there's this idea of Bitcoin treasury companies like MicroStrategy, MSTR US, we know them, but now also SBET US, which is an Ethereum treasury company.
Yeah, they're essentially holding large chunks of these digital assets on their balance sheets, like digital gold, but maybe in armor, as Nutstuff puts it, resistant to inflation, censorship. It's a core corporate strategy.
And then stablecoins. Nutstuff brings up Pippa Malmgren here, making a really profound point. They're not just some niche asset or Russian shares, as the quote goes.
No, they're fundamentally dollars on blockchain rails. That's the key insight. The real story, Nutstuff argues, is this is a new form of money and accounting, a whole monetary regime shift. They compared to Britain ditching the old tally stick system back in 1834.
The tally sticks. Those notched wooden sticks for accounting.
Yeah, exactly. An ancient system. Getting rid of it, even though it's symbolically involved burning down Parliament,
Yeah, at the fire.
that paved the way for modern finance, the Industrial Revolution. Nutstuff is suggesting stablecoins could be that significant for our digital age. A foundational shift.
So when stablecoins just start appearing on our phones, maybe in the middle of the night, as they say, we shouldn't just brush them off.
Definitely not. And there's a warning. Don't repeat mistakes like the Russian privatization vouchers,
Hmm.
where ordinary people sold off valuable new assets way too cheaply to oligarchs and ended up poor.
This is shock therapy, they call it, implying it's going to be fast and transformative.
Profound and rapid economic change, yeah.
Okay, so from digital money to digital meaning, what about the threat to content from AI? Everyone's talking about it. Nutstuff mentions a lunch with the communications expert, B.J. Cunningham.
Right, and Cunningham offered a really challenging take. Quite provocative.
Go on.
He basically flips the question. He says it's not whether AI will replace creativity, but whether you were ever actually creative in the first place.
Ouch.
Yeah. His point is AI scrapes the surface, the thin pages. So if a bot can simply swallow your life's work in a sentence, maybe you didn't have a life's work.
So the mediocre stuff, the average stuff.
The middle is dead, he says.
Ah.
The vanilla. It's doomed. The only way forward is to be unsummarizable, to bleed a bit on the page, to be the well, be deep, dirty, unpredictable, untouchable.
Wow. That's a call for real authenticity, real depth.
In an age that kind of pushes towards superficiality, absolutely.
That's a powerful challenge. You know, in a world where AI can summarize everything, maybe that truly original, unsummarizable thinking, that's the ultimate competitive edge, whether you're a writer, artist, investor.
Finding that unique alpha, yeah.
And this connects to another really intriguing idea Nutstuff throws out there about data centers. We hear about these mega centers, right? Like that Stargate one in Texas, 189 football fields, just enormous.
Huge. Concrete, power, massive infrastructure.
But Nutstuff asks, what if we did something different? What if we retooled existing hardware, specifically spare or even broken iPhones?
Their argument is fascinating. We're not short of hardware, we're short of imagination.
Okay.
They point out just the screens from all the spare iPhones in the world would cover 1,200 football fields. And crucially, they're already manufactured.
So power them up, connect them.
And you could create a global low-energy compute layer. One that doesn't need more concrete poured, doesn't drain the grid in the same way.
Is this just theory?
Apparently not entirely. Nutstuff notes that 8,000 iPhones are being onboarded daily into this kind of network. It suggests a possible path towards decentralized, maybe more sustainable computing power.
Very interesting. Okay, let's bring the discussion back home, specifically to the UK, with what Nutstuff calls a stark UK reality check. And they really pull no punches here. They point to, their words, the gross incompetence of the entire government.
The numbers they lay out are, well, brutally simple. Quite stark. HM government income. Around 1.1 trillion spending. 1.3 trillion. That's about 47% of the UK's total GDP being spent by the government.
And the big ticket items driving that deficit.
Interest on the national debt, 107 billion. Welfare, 303 billion. The NHS, 190 billion. Education, 89 billion. Those are the huge chunks.
And what Nutstuff finds, frankly, amazing is that despite these massive, clear figures, the public debate, the media, the government, they often get bogged down arguing about, 2 billion here and 3 billion there.
Which Nutstuff says is just meaningless, pathetic, and totally misses the point. It ignores the scale of the actual fiscal imbalance.
It really does highlight a potential disconnect, doesn't it, between the scale of the problem and the focus of the conversation.
Absolutely. And adding to these domestic challenges, Nutstuff points out the UK is looking at the largest single-year departure of wealth ever recorded. They project 16,500 high-net-worth individuals will get residency somewhere else in 2025.
16,500. That's a significant brain drain and a capital drain, too.
It really is.
And they give this incredibly specific, almost eye-watering detail on spending. 600 million taxpayers' money from the Department for Work and Pensions spent on mobility cars for nearly 600,000 claimants.
Yeah, 589,550
Just-
claimants. And then Nutstuff lists some of the reasons cited for eligibility for these cars. It's
Yeah.
quite something.
Go on.
Okay, 20 for food intolerance, 10 for failure to thrive, $230 for Tourette's, $150 for frozen shoulder, $220 for drug misuse, $770 for alcohol misuse,
Wow.
$1,030 for generalized anxiety, $7,460 for depressive disorder, $800 for obesity, even $40 for tennis elbow.
Tennis elbow for mobility cart.
According to the source, yes. And Nutstuff uses this specific breakdown, I think, to illustrate their point about that disconnect between policy intention, spending, and maybe practical outcomes. It feeds into their broader critique of incompetence in fiscal management.
It's certainly a stark example. Now, another big UK trend Nutstuff highlights involves pension funds. Back in 2000, UK pension funds had nearly half their assets in UK stocks, close to 50%.
Right, standard practice that.
By 2024, that figure has crashed down to just 4%.
4%, that's an enormous shift out of domestic equities.
Huge. And they point to Scottish Widows, a big pension provider, cutting its UK stock exposure from 12% down to just 3% in its main growth portfolio.
So the big money is fleeing UK stocks.
It seems so. But interestingly, Nutstuff says they are happy to swim against that tide selectively. They see opportunity where others are clearly divesting. Contrarian again.
Consistent, at least.
Okay, so we've covered a massive amount of ground. Global macro, energy shifts, geopolitics, the whole digital frontier from Bitcoin to AI creativity, and then this stark UK reality check. What does it all mean for you, the listener?
Yeah, it's been a whirlwind. I think the consistent theme that keeps popping up is transition. We're in a world undergoing profound change. Old systems, traditional ways of thinking, they're all being reevaluated. And new opportunities, but also significant challenges are emerging, often in really unexpected places. The sources, especially Nutstuff, really push us to look beyond the day-to-day headlines, to question our basic assumptions about how things work.
It feels like a powerful reminder, doesn't it? Whether we're talking markets or politics or even creative work.
Yeah.
That ability to synthesize, to connect dots others don't see, and maybe to be truly unsummarizable, that seems like the ultimate advantage right now, the real moat.
Well put. And as Nutstuff apparently heads off to the Finnish archipelago for cooler summers,
Yeah.
that itself prompts a final thought. Could climate comfort zones, seeking cooler climates, truly redefine where property value gets re-rated in the long run? Could places like Finland, or maybe even Sutherland up in Scotland, become surprisingly attractive for investment, for living?
Climate refugees seeking comfort, not just safety. Interesting. Something to definitely mull over as you navigate your own deep dives into all these complexities.
Indeed.
Thanks for joining us for this deep dive. We hope it sparks some new thoughts and valuable insights for you.
Disclaimer. North Breach Limited, Nutstuff trading name, is an appointed representative of Messels Limited, which is authorized and regulated by the Financial Conduct Authority. Nutstuff has made every reasonable effort to ensure the information provided in this communication is correct. But Nutstuff makes no representation nor any warranty as to whether the information is accurate, complete, or up to date. To the extent permitted by law, Nutstuff accepts no responsibility for any errors or misstatements, negligent or otherwise. Nutstuff, its associates, officers, or employees may also have interests in the financial instruments referred to in this information by acting in various roles. The information in this media is confidential. If you are not the intended recipient, you are not authorized to use the information in this media in any way. Nutstuff does not guarantee the integrity of any media or attached files. The view or opinions expressed are the author's own and may not reflect the view or opinions of Nutstuff. Electronic communications carried within the Nutstuff system may be monitored.